What is up, YouTube? What is up, Canada? Let's try this round two. Apologize for the lack of sound on that last one. But what I was trying to say to you guys is, look what I got in the mail today. I got my Louder with Crowder mug. So if you guys haven't checked out Louder with Crowder or, Steven Crowder, I'd really encourage you to go check out his content. I think he's doing some really great stuff in the US. And actually today I was watching his live stream where he's not on because he's in Texas, or he's at the hospital getting his heart checked out in Texas, I should say. But anyways, just want to say, I'm actually surprised how legit this is. This is like a real mug. I thought it was just going to be like a tin mug, but I'll actually still be drinking out of my Problems or Profits mug today. But the reason you guys probably clicked on this video was we're going to be talking about the Canadian real estate market and whether it could continue to go up forever. And now I'm not saying it's going to go up forever, and I'm not saying it's going to pop tomorrow either. What I am saying is let's get into a thought exercise where we explore what potentially could allow Canadian real estate to continue to go up. Because yeah, I see everyone's comments that, Canadian real estate prices are unaffordable. It's unrealistic to think they'll keep going up. Again, I think affordability is certainly maxed out, especially in major metro cities like Toronto. It doesn't make sense to me. I do understand the affordability in smaller markets that maybe haven't seen the same sort of bull run for the last, 4+ years. However, all this being said, taking a step back, there are ways that we could actually create more affordability. Let's call it that. When looking at Canadian real estate without necessarily seeing a reduction in prices. So what we're going to discuss today, I'm not saying it's going to happen. I'm not even saying there's a high probability chance it's going to happen. But I think it is worth looking towards Europe and some of the other mortgage markets out there and learning how have they been able to sustain what appeared to be unrealistically high or inflated prices. And so we're actually going to get into some pretty good little studies today. So we've got a lot of links in the video description down below. Encourage you guys to jump over, check it out. I'd love to get your thoughts. What real estate market are you currently watching us from? And how hot is it there? And do you think it's sustainable? And if you don't think it's sustainable, do you believe it's going to pop soon? Let me know in that comment section. As you guys have seen, we've been covering a lot of the data these days when it comes to Canadian real estate. And overall, I mean, there's so much demand compared to the supply. I just don't see how prices could correct really quickly. But first, I want to take a step back and let's talk about low interest mortgages, because that's definitely at least a part of the culprit I would consider towards why we're seeing such high Canadian real estate prices. So this is a reminder, like back in 2019, right? Remember when Denmark or Danish banks had really low interest rates and we're all like, that's crazy. How could that continue? Well, let's just kind of look where are they at now in 2021, because this is something I don't hear as much about. Well, right now in Denmark, you can now get a 20-year mortgage for 0%. So the once unthinkable notion of borrowing for 2 decades without paying interest comes as central bankers across the globe shy away from rate hikes. So it's interesting. So again, I'm not saying this is going to happen in Canada. I'm not going to say it's going to happen anywhere else in the world, but this could, in theory, if we saw a monetary policy like this, if we saw residential retail banking rates drop to 0% for Canadian real estate, I'd almost guarantee you'd see prices increase. But again, it is a little bit different here because we're talking about a 20-year mortgage, where most of our amortizations in Canada are 5 years or less. So again, we'd have to see a real evolution here, I think, to see the same sort of huge boom that I would expect this to have on Denmark's real estate. But let's then move into like more general mortgages in Europe. And this is from Statista. And, one of the things they just kind of comment on down here, they're talking about some of the European housing bubble and prices that have gone on since 2008. But one of the things they talk about is crowdfunding. And so this is an important aspect to understand as well. We could also see different ways for more money to compete for the same real estate. And again, that could actually continue to drive prices up. I'm not claiming it's going to happen, but those are 2 ways that I could certainly see something like that happening. But let's actually take a step back now and look at what's going on with interest-only mortgages in a lot of European countries. Because if you haven't been paying attention, they've really grown in regards to the number of interest-only mortgages. And let's actually look back like 2005, 2006, 2008, and all that, and use this as a case study to see what exactly went on with house prices and mortgages and all those different details. Because one thing that we will notice as we go through these studies is that affordability, like consumer affordability obviously changes drastically when they only have to pay interest and no longer have to pay any of the principal. So what I'd love to hear from you guys in the comments is, what is your thoughts and your opinions? Would you be willing to take on an interest-only mortgage, whether we're talking as an investor or just for your principal residence? But what we can see here is, and I'll come back to the source of this study in a second, but this is from the International Comparison of Mortgage Products Offerings. So in 2005, 2006, we've got a handful of different European countries here, and we can see the growth, right? The growth in interest-only mortgages as consumers can, mainly growth. A few of them have kind of cooled off, but again, we'll get back into this a little bit later, and there's been more growth in this in more recent times. But again, I just found it interesting as a Canadian because I think far too often we get caught up simply thinking about how mortgages work here in Canada. And maybe if we're thinking creatively, we might go towards the US and look to see what they're doing there. But I think it's really important that we understand that there's a lot of different mortgage products and a lot of different ways to finance real estate out there. And it's not impossible that we could see some of these strategies adopted here in Canada. Again, that could directly impact the trajectory of our real estate prices. So I really do think this is an interesting study. So I guess going back here, essentially, this is the study there. If you guys want to check it out, there's a link in the video description down below. But then when we look at this, so this one, I'll get back to this in a sec where this source was. But what I found really interesting here is IO's interest-only loan. So when we look at the interest-only loan share, right, its growth, as well as like consumption to income, leverage, and interest payments to income, right, we can see house values to income dramatically rises soon as interest-only shares start to really take up a bigger portion of the market, right? So if we then, I wanted to make sure I didn't miss that one. So again, this is looking at it, interest-only mortgages and consumption growth and evidence from a mortgage market reform. So what I found just really interesting diving deep into some of this data is just how different it actually is in Europe. So actually, let's jump over here first. So here's another great example that we Canadians are familiar with in the US, as the US is able to, on their principal residences, deduct the interest, right? The interest expense. Well, here's a summary of some of the different incentives that go on in Europe. And now this is an older study. I think it's from like early 2000s or the 90s. But what's just interesting in general is a quick refresher or reminder of all the different ways that the government could incentivize home ownership, or they could try and support or prop up a real estate market. Again, I'm not saying that that's going to be their intentions or that they will or will not do this, but there's a chance. And so again, when people say that there's no way real estate prices could continue to rise or stay at the current level, yeah, I understand why you think in our current conditions, but what we need to understand is these conditions are always dynamic, guys, right? So you need to really understand that we should be focused on the fundamentals, I guess, is what I'm always trying to get to the bottom of. Is it's concerning to me when I see people getting caught up in news headlines or wanting to time the market. And again, it doesn't matter whether you're trying to time the market, buy low, sell high, or you're just trying to make a penny here, or like buy for a nickel and sell for a dime. But what I really want people to focus on is developing a skill set, having fundamental understandings of what your business model is, and then just implementing it ruthlessly, right? What we need to do is stop getting caught up in listening to pundits, right? Like the fact that, yes, CMHC and Bank of Canada and the six big banks here in Canada, they obviously can help direct how the real estate market goes. But in part, that's our fault for listening to them, right? When we listen to CMHC tell us that they're forecasting that COVID could cause a 9 to an 18% drop in Canadian real estate prices, like, it's just noise. It way too often we've got this bias towards thinking that because someone's from an organization, because they're from a board, because that they've got a fancy title, that clearly that must make them an expert. And I'd much rather see you guys getting into your own research and really just thinking critically. Now, again, everything we discussed today, I haven't seen any policies that make it seem like we're going to get 0% interest rates tomorrow in Canada. I haven't seen anyone really pushing to legislate to see a lot more interest-only mortgages. So again, I don't suspect that this is going to happen overnight. I don't even suspect that it's on the horizon likely. But when I see people just saying that absolutely there is no way that Canadian real estate prices could rise, I'm just like, no, they definitely can, because for the last 10 years, people have been telling me that they absolutely cannot rise, and that's what they've done. So again, reason it hasn't stressed me out per se is because I'm focused on the fundamentals. I can last because of cash flow longer than the market can stay irrational, or at least that's my logic behind it. So jumping back to some of the other details here, just when we're thinking about other ways governments can incentivize individuals, again, we've got mortgage insurance here. And this was something I kind of found interesting, was that there isn't nearly as much government insured mortgages as I assumed there was. I knew Canada and the US did it. I just assumed everyone did it because we did it. So again, I think it's a great reminder that, there are a lot of different ways to finance real estate. There's a lot of different ways to skin that cat. And I think that things like crowdsourcing, like blockchain, NFTs, however that all evolves, the fractionalized ownership of real estate or the fractionalized ownership of the debt behind real estate, either one of those could dramatically change the ability of individuals to compete for real estate. And the moment we start to see smaller individuals being able to compete for real estate, we're going to see more dollars competing for that real estate. As we see more dollars competing for that real estate, we're going to see prices and pressures push upward, right? That's what we're going through right now. Every market in Ontario essentially has less than 3 or 4 months inventory, according to CREA stats. And in fact, a lot of markets are still under 1 or 2 months inventory. It will take several months for that inventory to build up unless there's a really negative black swan event where all of us Canadians decide to sell all of our houses at once. But again, in the past, the government has essentially telegraphed their position. They don't want to see real estate crash. They don't necessarily want to see it skyrocket either. They'd like to just see it amble along. But we've talked about this before with my the great inflation, right? Could we be going through a massively inflationary cycle where all of a sudden this is going to become new normal simply because the rules of the past have maybe changed? But anyways, really appreciate you guys listening to me just kind of talk and explain through some of this subject matter. I hope you guys enjoyed this. I hope you got some perspectives in regards to maybe some interesting different mortgage products that are out there in the world. Again, not saying any of these are coming to Canada tomorrow, but I think it is worth the thought exercise because the government probably does have a few other tricks or tools up its sleeve if it doesn't like the direction real estate prices are going in. So let me know your thoughts, your opinions in the comment section. Appreciate you guys, and we'll see you tomorrow.